Hey, Slater Crusaders, America's the greatest country in the world. Thanks for being here. Our newest special called Cryptocurrency 101. If you invested $100 in Bitcoin in 2010, when it was first created, I'm hesitant to even say the rest of this sentence. You put $100, that's it, $100 in Bitcoin in 2010. Today, you would have $50 million. You turned $100 into $50 million. But the question remains, what is it? I have no idea. I know nothing about cryptocurrency. I've never felt more like my grandpa trying to turn on a computer than when I'm reading articles about cryptocurrency. I know nothing other than the last few weeks has just shot through the roof. But that's why we're here. Because I want to know the true story. I have some, I should say, maybe off the top, but I don't even know what I have. So a lot of questions. Should people invest in this? This is what we're going to ask today. Should people invest in this? Is that how you should think about it? Is it an investment, really? What's the point? What's the goal? What's the end goal? What problem is it trying to solve? And what's the vision in the end? How's it made or mined? What does that look like? We talk about Bitcoin all the time. It's like the name brand, but Ethereum is another really popular thing. But like, what's that? And there's all these other currencies. Are they currencies? And then, of course, how will the government screw it up? Because they always do. So those are the questions that we're going to get to with our wonderful guests today. And by the way, the guests we have on today do know what Bitcoin is. Seriously, every time someone's tried to explain it to me, I've never felt dumber. So I want to intro, because I can't give any insight here, but I want to fall back on what I'm most comfortable on, and that's history. Right? So I want to share a little bit of history of this. It all started with this guy, Satoshi Nakamoto. Now, I say this guy, and you just put a face to Bitcoin, and you'll never forget that face when you think of Bitcoin now. I say that, but no one knows if that's his real name. No one knows where he's from, and we think Japan, and no one's sure if that's him. And there could be a team of people. There's like all these theories about who Satoshi Nakamoto really is, or who they are. It could be a bunch of people, which is all a very nice metaphor for this whole thing. Because I was like, oh, I'll tell our audience something about Bitcoin. Who started it? And like no one knows. Some reporter think they found that guy in real life, and that's the picture we showed. But that guy says it's not him. He says, I got nothing to do with it. So I don't know, maybe he's right. But whoever he is, or they are, he has 1 million coins. He started it, so he set aside 1 million coins for him. That is $50 billion. When he first started, it was nothing, right? Now it's 50 billion. That would make him one of the richest men in the world. But there's a nice wrinkle to this story. People could see the wallet. They could see his wallet with 1 million Bitcoin in it, and he's never touched it. He's never sold it, which has created these rumors that he's dead. And if he's dead and he never shared the password, then that 1 million Bitcoin's lost forever. The $50 billion is gone. What? How about that for a story? Let me up it one. There's a guy who back in 2011 made a video on YouTube explaining how Bitcoin works. And it's a very nice, well-produced video. And people paid him in Bitcoin, right? Just people who liked the video. They're like, oh, cool video. Here's a little bit of Bitcoin. And he put it all in an encrypted hard drive, like a UBS hard drive. He forgot the password. And the hard drive allows for 10 password attempts. And if he guesses wrong 10 times, it deletes everything on it forever. On that little hard drive is $320 million. He's just a guy, just a regular guy sitting on a little stick, a little USB stick that's got $320 million on it, and he can't get in it. He's tried everything. He hasn't slept. He's trying to think of the password, and he's tried 8 times. He's got 2 more tries. And I'm thinking, this is how, like, grandpa I am, I'm like, oh, we'll just do a password recovery and tell them your mother's maiden name. It's like, no, that's not how that works. That's the whole point of this whole thing is it's decentralized. There's no person you can call to help you recover your password. That's it. And then I'm thinking, well, just guess. We all do that with our passwords. Like, oh, it's capital, not capital. Number, you put a number at the end, right? So just say guess. No, but the password could be like 30 random letters and numbers, which is impossible to guess. $320 million! Poor guy. So he's concluded that he just has to make a decision with his life. Either he's going to regret this and let this define him for the rest of his life and never sleep a wink ever, or face the fact that the money's gone and move forward and just get back to work. So do you see how difficult this is already? The thing that I thought I was hoping I could bring to the table here is to tell the history of something. And I can't even do that. Like, here's the guy who we think got it started, and here's a guy who forgot his password. Like, that's all I got. But I will say this. There's a tension here that's a good thing. It's exciting to be in the beginnings of something. Whatever that something looks like, where we don't know what it is. And people are arguing over what they think it could be. It was true at the beginning of cars even, right? Like oh, they're dangerous, they're loud, they're gonna ruin society. And people are like, no, they're great, right? And so we have different visions and pros and cons and for and against and fighting and no, and you guys are stupid for not investing and you guys are stupid for investing, right? It's like, there's a really nice tension here that I just wanna lean into and embrace. Peter Thiel, the great investor, Peter Thiel, he was on Naval's podcast the other day. I just wanna play a clip here. And just so you know, FANG, he uses the word FANG. FANG is Silicon Valley talk for Facebook, Amazon, Apple, Netflix, and Google. So again, he's talking about the beginnings of the tech boom when people thought that was all really stupid to invest in as well. So that's FANG. Here it is.
I know probably the one asset that I most strongly believe in. As an investor, you often want to find things that are so stupid that other investors are embarrassed to invest in them. And so, for example, the FANG stocks were an instance of a stupid asset. It was the really big tech stocks. It was just Jim Cramer came up with the FANG acronym on Mad Money in 2014. If you just followed his advice, you would have made 8 times your money in the last 6 years. You would have done better than any venture capitalist. It was too stupid in a way. And so my candidate for the investment that is so big and so stupid that professional money managers are embarrassed to do it because it suggests they're not doing enough work is to just buy Bitcoin.
Great. Like I love that tension we're in right now. It's like, yeah, buy this thing, but only because it's so stupid you're embarrassed to admit it. Like, what kind of advice is that? But that's what it is right now. Now, I'll end here before we get to our guests because I want to leave plenty of time for them. But I do know enough, and we all know enough about human nature. And I can say this, or at least this is the posture I'm moving forward with. Everyone who says they know what the future holds is wrong. And whatever you and I at this moment think cryptocurrency is, we're probably wrong too. Or it'll change, and who knows what it'll ultimately be. Some people are gonna make a lot of money, and some people are gonna lose a lot of money. And the government will eventually take it over and screw it up. These are truisms of life for all time, and there's no reason why they won't apply here as well. So let's get to the true story next. Cryptocurrency 101. Mike Slater, spread the word. Hey, Slater Crusaders, welcome back to our special all about crypto and Bitcoin and Ethereum and blockchain. And what is all this stuff? I want to go to Jesse Benton. He is the president of the Digital Asset Policy Network, DAP.net. Mr. Benton, how are you, sir?
I'm doing great. Thanks for having me. Really appreciate it.
Really glad you're here. So help me understand all this stuff. So let me start with the need. So what is decentralization? Why is this a necessary thing?
Really what it all comes down to is trust. For a couple thousand years, our financial system has relied on trust and trusting third parties, trusting government, trusting banks to validate and carry out financial transactions. And as we're seeing, institutions aren't always worth the faith that we put in them. So the whole concept behind blockchain, Bitcoin, is to remove the need for a trusted central authority and allow people to interact together, and then to commoditize the trust of the entire community to validate and hold up the system. So you have no more need for a centralized agent of trust to run things and get in the way, mess things up, bog things up, get corrupted, all that stuff.
Who are these current things that we would bypass with cryptocurrency? Is it the banks?
You bypass the entire financial system. It's a complete financial revolution. You bypass the need for banks. You bypass the need for a lot of government. A lot of regulation can be done on chain. A lot of things like fraud and things like that simply aren't possible in a real decentralized community because of the commoditized trust of the entire community verifying transactions.
Okay, so let's table that. Let's go to the blockchain. What is blockchain? Help me understand this.
Blockchain is essentially a ledger. So a lot of people don't realize that. A lot of people focus on the tokens. The tokens like Bitcoin are a reward system given to people for holding up the system. The blockchain is a decentralized ledger that records information. It's a database. So, it cannot be, once it is edited, once it's stamped, it can't be edited. It's immutable, it's time-stamped, and it continues on in perpetuity.
Of what information?
Whatever information you want to put up. For example, Bitcoin is primarily a way to validate transactions. Jesse, I'm going to give Mike this much value for this product. We exchange this value. We agree. 51% of the community holding up the system says, hey, that looks good. We agree. We validate the transaction. It's stamped in the block. The information is then there in perpetuity in a block. It cannot be overwritten. Again, it's immutable, and it's time-stamped, and it is auditable. That's another thing, too. It is 100% auditable by the community going back in perpetuity throughout the life of the blockchain.
So this is interesting because I thought all this stuff was like anonymous and like, I don't want to say shady because that's a connotation, but like something where if you wanted to remain off the ledger, but you're saying it's an immutable permanent ledger. So those are opposite things. What's going on there?
Well, that's correct. You know, it's funny. There's an article I read a couple of years ago that said those times you bought marijuana on with Bitcoin 5 years ago kind of come back and haunt you. That's absolutely true. There is a certain amount of autonomy because you're not necessarily linked to a wallet. However, transactions made on the blockchain are auditable and they're immutable and they go back through time and they can't be traced. This is not it'd probably be the worst tool for terrorists or drug dealers ever. If you really,
I thought that was like
tracks.
the main. But wait a second.
No,
but what about like?
Myth. It's a total myth.
What about the people who would like take over a government's website and say, "Pay us in Bitcoin and we'll let your servers back"? That's not anonymous.
They're playing with fire. Look, that stuff, that transaction, that Bitcoin that's sent from wallet to wallet, they're going to have to take that down and put it in cold storage. They're not going to be able to keep it and send it around because it can be traced wallet to wallet, transaction to transaction. That's some pretty high risk stuff. I think they're preying on the ignorance of government systems administrators. Wow. This stuff. If years down the road, if the forensic detectives want to get after them, they're going to be able to.
So if it's a permanent ledger, why would the government not be able to regulate it and take it over and ruin it just like they ruin everything else?
Well, again, because it's decentralized, there is no one central point of attack. It's held up by tens of thousands of different computers that are running the Bitcoin protocol or the blockchain protocol for whatever chain it might be. And you'd have to attack 51% of the entirety of the computers running the protocol or holding up a copy of the ledger on their individual computers. So there's almost no way to do it.
What about like, so like what is Bitcoin? And is it not just another fiat currency that is just like nothing? Like what is it?
Well, what is money? Money has value because we give it value. We decide that it has value. Why does gold have value? Because it has some special properties that we've decided are advantageous. It's rare. It's divisible. It holds up over time. You can't manufacture more of it. There's no alchemy to make gold. The same with Bitcoin. It's limited. It's rare. It's divisible, it's portable, and you can't counterfeit it. So it's given value because people decide it has value, because it has value in this system of commoditized trust, of people seeking it as a reward for holding up the entirety of the ledger.
Yeah, that's so trippy. So I can understand gold, right? Because I can hold it. I can't hold Bitcoin. Mm-hmm. So how am I
right.
to think of it? And is it limited?
It's limited in that there can only ever be 21 million Bitcoin ever made. And the reward, the mining reward, decreases over time. We just had what's called a halving back in June, where the Bitcoin reward went from 12 Bitcoin for winning the prize for solving a transaction to now 6.5. And it'll have again in another 10,000 blocks, and so on and so forth, until the mining reward gets so small as you approach 21 million that it basically infinitesimal. So it's anti-inflationary. The inflationary supply decreases vastly over time, and yet the value of the coin will go up substantially over time.
If that's true, and excuse my ignorant questions, but I'm full of them.
Not at all.
If there's only a limited amount, let's go 20 whatever years down the road. Mm-hmm. And if you don't have any, wouldn't we have a similar wealth inequality, a power inequality with the people who have a ton and the people who have none?
Well, there's no perfection here. And I think people should start grabbing some Bitcoin. However, you do point out, like, money in by definition has to be scarce, right? It's scarce because it has value. There are about 46 million millionaires in the world, and there can only be 21 million Bitcoin. So that means that every millionaire can't even have their own Bitcoin as adoption becomes more and more broad. So that's another reason why I am extremely bullish, and I see the price of Bitcoin just continuing to climb, long term. There will be less Bitcoin to go around for everybody, but the value will go up.
So can it be used in transactions because it's so volatile? So I saw Chamath the other day. He said in 2014, he paid $1.6 million in Bitcoin for a piece of land in Tahoe. And now that Bitcoin's worth 150 million. So that type of like increase in value makes it not a thing that you would use to trade. So how do you see Bitcoin being traded in exchange for things?
You bring up an excellent point, and that is why right now Bitcoin is much more of a store of value than it is something for purchases. Now, certainly, people that bought in early and have a lot of Bitcoin, that Bitcoin has grown in value a lot. They might be in a position where they want to go ahead and spend it. If you got Bitcoin for $100 back in 2012 or 2013, spending it at $40,000 isn't so bad, right? There's a lot of value there, and you're disseminating the Bitcoin out into the system. But transactions are slow on Bitcoin. A block takes 10 minutes, so it takes at least 10 minutes for us to process a transaction. And then fees are not cheap. Fees can be several dollars. So we're never going to see Bitcoin in its current state used for buying a cup of coffee. We're going to see it for major transactions, and we're going to see it as a store of value.
Interesting.
There's other technologies, Lightning Network and things like that are being built to make it more attractive for smaller payments. But you bring up a great point too. I spent more Bitcoin than I'd like to admit. I got some Bitcoin early, and I've probably spent 1,000 Bitcoin, anywhere from $200 to $9,000. And every time it burned me, because I really did think that, hey, this Bitcoin is going to be worth $300,000-$400,000 a coin in several years, and I'm spending it at such a lesser value than I could be. But you buy when you need to buy.
Okay, we only got a few minutes, but what is Ethereum?
So Ethereum is the second highest capitalized cryptocurrency, and it is very different than Bitcoin. Ethereum is a smart contracting platform. So it is made for other people to build decentralized applications, or dApps, that lay on top of the Ethereum blockchain and exchange information and carry out all types of different functions, whether it be for computing, exchange of goods, exchange of value. There are thousands of ERC20, we call them, token applications or decentralized applications that lay on top of the Ethereum blockchain and set up smart contracts, or contracts that don't need a centralized authority to execute. You don't need a lawyer to escrow money, or you don't need an attorney to say this contract is done. They're simply executed when agreed upon terms are met, and outside forces agree that they've been met, and boom, the value is exchanged.
Can this take off, whatever that even means? Can this become ubiquitous if it's so difficult to understand and outside of people's normal, right? Like, I'm a pretty smart guy, and I'm like young enough where I'm like tech enough to understand. And it's like, I'm trying my best, and you're doing an amazing job explaining this. But like, my grandma will never understand this, right? So how ubiquitous can this get?
Well, look, I mean, I think, 30 years ago, we would thought it was crazy if we all had, boxes on our phone that we carried around in our hands, and we were able to, stream video, any movie we ever wanted at the palm of our hand, and information, World Wide Web. We would have thought that was pretty crazy. So yes, this is a revolution, and it's still a very, very young technology. Let's see, like it's 11 years old, very, very young technology, and there's a lot of room for adaptation. There's also a lot of need for more tech build out. Ethereum is showing that while there's tremendous potential right now, tremendous promise, it's not quite ready yet. We're seeing a real spike in what they call gas prices, which is the transactional cost to execute transactions across the Ethereum blockchain. They're starting to get cost prohibitive. So there's going to have to be a whole new layer of innovation before things like smart contracting is ready to use in daily life and for the regular person. But we're so early. We're so early. People that think that you just don't get there overnight. In a lot of ways, we built a huge deluxe 24 bay service station with a Taco Bell and a Subway. That's great, but people are still driving around in Model Ts and a lot of horse and buggies. We're not quite ready for it yet.
Yeah. I'm on like a donkey on like the dirt road next to the road that's being built. So last question, we got to run, but give me an argument that this stuff's all going to fail. What is that argument? I'm not saying you agree with it, but what's the argument? Because I go on my Coinbase account, and full disclosure, I just got a couple bucks in this stuff. But there's like 50 of these things on the Coinbase that you could buy.
Right.
So who's making these, and what fails, and why does it fail, and could this all fail?
So a lot of them are going to fail. Bitcoin will not fail. Bitcoin's here to stay. A lot of the other tokens right now are completely skeptical. I'm sorry. They're I'm so sorry. I know
the word you're thinking of too. I know what you're talking about.
You know the word I'm looking for.
I'm totally with you.
Yeah. So look, they're not ready yet, and most of them, I'm sorry to say, will fail. Many have failed. So it's a completely speculative investment at this point. Neat ideas. Some stuff is getting off the ground. There are some real world applications, and there is some money to be made. But the only thing that is 100% real is Bitcoin. The other ones, hey, great technology, great ideas, but you're looking at the many thousands of cryptos. Most of them are likely going to go to zero at some point. Some of them will emerge to the top, and they'll evolve, they'll grow, they'll learn how to scale, and they'll and there'll be big winners, but there will be a lot of losers.
Crazy. Jesse Benton, let's do it again, sir. President of DAP.net, Digital Asset Policy Network. Thank you, sir.
Thank you.
Appreciate you. Mike Slater, True Story. Spread the word. Hey, Slater Crusaders. So welcome back to our special about cryptocurrency. I still have no idea what we're doing. So I need so much more insight and wisdom from people who know. And also I want to talk about what government's role is in all of this. Andrea O'Sullivan is here. She's the director of the Center for Technology and Innovation at the James Madison Institute. Andrea, how are you?
Great. Good to be here today.
So pretend you're talking to a random person who's never heard of Bitcoin or whatever. How do you briefly describe Bitcoin?
Sure. So the easiest way to describe Bitcoin is that it is a way to send direct payments to anywhere in the world online without having to rely on any other third party. So when you think about a cash transaction, right, in real life, I hand you a dollar bill, you take the bill, that's the end of the transaction. Well, how do you do that online? You couldn't for a long time. You would need to go to, Visa or Bank of America or something like PayPal, and you'd have to rely on them to actually send the money. That works most of the time, but sometimes, they make mistakes. Sometimes they block your transactions and they collect a lot of data on you. People don't like that, right? Governments can access that data, and you never know who could get their hands on it by accident. So Bitcoin allows you to send money directly to another person. It's facilitated by a network where nobody can block a transaction, nobody can inflate your money away, and it's very reliable. It's existed for over a decade now, and we've had no major issues with it. So it's really an exciting technology for people who want more financial privacy and freedom online.
All right, I got a ton of questions. So I love all that, and I'm all into decentralization, and I'm pro all this. This is why I'm so curious about all this. But like when I bought some Bitcoin, I went to whatever, Coinbase or whatever. Aren't they operating the same way as Bank of America then?
That's exactly right. So there's a lot of third parties that build on the Bitcoin network. Some of them serve traditional roles like banks did. And people like that, right? They like to have the use of a private currency that can't be inflated, but they also like the usability, right? The user friendliness of having a bank you can go to say like, hey, reverse my transaction or take care of my keys for me. I'm too worried to do that on my own. So, some people like that, but a lot of people would rather have it directly controlled, totally private. So a lot of people run their own wallets. A lot of people do it all on their own too. The great thing is you have choice with Bitcoin, whereas with traditional payment networks, you don't.
How would you do your own wallet?
So you would download the software. It's open source and available for anybody to review the code to make sure it's all up to snuff. There's special hardware and software you can buy and install to help make it easier for you, and you just maintain that on your own.
Okay. How does one mine Bitcoin? We understand gold, right? But why does a Bitcoin have a value, and can't we just make an infinite amount of it?
So Bitcoin has a value because people value it, right? It's kind of a tautology, but there is a great value in being able to send money anywhere in the world that can't be controlled by any one party, including governments or banks. So why do people mine it? So it costs a lot of computing power to send money anywhere in the world. The way that the Bitcoin network is designed is that anyone in the world can put their processing power towards running it. And how are you rewarded? Well, you're rewarded by getting new Bitcoins. It is kind of like gold. You can think of like digging deep into the ground to get more gold. So that's why it has the name mining. As to the question of can we make more? The way the network is set up, no. The protocol is capped so that there's only 21 million Bitcoins that can ever be created. And that is for a very important reason. We don't want the currency to be inflated. We don't want people to lose the value of their money. So it's very important that 21 million cap stays in place, similar to gold. There's only so much gold in the world. You can't make any more of it. So it does mimic kind of a historical gold standard in that way.
How much energy does it take to mine a Bitcoin?
So in the early days of the network, it didn't take very much at all. In fact, my husband and I were Bitcoin miners quite a long time ago when it was easy enough to just run it on your network. Again, it mimics gold. So at one point, it was very easy to find gold. It might be just in a river somewhere, right? You can take a pan.
Yeah.
But as we extract more and more gold, it's harder and harder to do. Bitcoin is similar. So as the network grows larger, as it facilitates more transactions, it's going to take more computing power, first of all, because that's just what it takes to run the network. But it also kind of mimics the value rate of gold also. So today you have special companies that invest a lot of money in hardware to mine that gold. And you can't just run it on your laptop anymore. You're not going to earn many Bitcoins that way. You have to have really kind of specialized mining equipment in order to make a return on that.
Okay, so maybe this is too technical, but what is that code doing exactly? Well, that requires so much energy to do.
Right. So when you're sending a transaction, you're really making an entry on what's called the blockchain ledger. That's a record of all transactions in the world. Because we don't have any one central party that's saying, okay, Bob sent money to Alice and Alice sent money to Charles, you have this cryptographic hash, right? So I'm trying to make this kind of simple. So what the mining is doing is verifying that the money is going to the right place. And it's costly because you don't have one party that's just, keeping everybody's information and physically or digitally moving the money between accounts. So to put it pretty simply, the money is cryptographically ensuring, or the mining is cryptographically ensuring that the money is going where it's supposed to be.
When we hit, you say there's a limit at 21 million Bitcoins, right? First, I'm curious if what is that just an arbitrary number or why they chose 21 million? But what happens when we achieve, so there's a couple questions. Why 21 million? How many Bitcoins are there now? How close are we to the 21 million? And what happens when we hit the 21 million?
So when we hit the 21 million, since it is a digital file, it's divisible, right, infinitely. So just because you can't mine, one Bitcoin, you can split it into any number of smaller units. I'm not sure that it was arbitrary. I think that the 21 million number was chosen based on the mathematics of the system. Perhaps it could have been another number. Perhaps it has some kind of numerological significance, but that is the number. In terms of how many have been mined so far, I'm not exactly sure off the top of my head. It's a goodly number of millions at this point. But an interesting thing about Bitcoin is a lot of those Bitcoins are actually inaccessible. Some of them are mined, right? I mentioned, mining in the early days when it wasn't worth very much. You might not think to store those private keys and you lose them. So in a way that actually helps the network because it makes the currency more valuable because it's more scarce. So you're welcome. But the actual number isn't so important as the fact that it is scarce, right? And that's what ensures that it'll have value as compared to a government currency where if you have a bad central bank, Zimbabwe, right, as the case study, the currency just totally collapses.
Wow. Okay, let's bring it into our government. So how will our government screw this up?
Well, to the U.S. government's credit, it has done pretty well so far. So one of my jobs is to engage with policymakers and regulators on cryptocurrency policy. And some of the decisions they made in the fairly early days, they could have banned it. They could have freaked out and said, this is going to facilitate all these bad things. They didn't do that, which is good. There are problems, right? So the tax treatment is pretty confusing and onerous on people that do engage in cryptocurrency transactions. And unfortunately, the U.S. does run a pretty extensive financial surveillance state on traditional banking processes that now cryptocurrency is coming to fall under that net. So there are problems, but I'm not too worried that the U.S. government is going to just ban Bitcoin anytime soon.
Isn't India banning Bitcoin? Isn't China banning it and talking about doing their own cryptocurrencies?
Yes, so India recently made some moves against Bitcoin and cryptocurrencies. China, they make statements and then kind of walk them back. There is a lot of cryptocurrency activity in China. What you're seeing is a lot of countries kind of coming to grips with what it means. So these countries are developing. They're in a different kind of context than the United States, but there's a lot of people working to kind of try to convince these countries that really embracing Bitcoin, embracing cryptocurrency is in their best interest. It would be not only good for their people, but also good for, frankly, the governments, right? It's a valuable asset, so why would you not want to be partaking in that?
Can they ban it? Is that possible?
They can try. So beyond shutting down the internet, there's not a very good way to just totally ban cryptocurrency. They can make it really difficult for people to get money in and out of the system, right? So the banking system is a way you can kind of try to cut that down. You tell the banks, hey, if you see anybody trying to make a cryptocurrency transaction, flag them, turn them over to us. So there's definitely ways to make it hard. In terms of making it impossible, it's actually pretty hard to make it impossible.
Yeah, because you said you could just do your own wallet. You could just own your own wallet and do it yourself, right?
That's right. Mm-hmm. The question is, how do you get into the system to begin with?
Interesting. Okay, what is Florida doing? Because I remember reading some headlines the other day that like the mayor of Miami has really embraced cryptocurrency. What does that mean?
Right. So Florida is making really great strides in cryptocurrency. So first of all, I don't want to brag too much, but our state is very well run. We have reasonable taxes and regulations, no income tax. So a lot of people that are fleeing from these kind of big government states, New York, California, these big lockdown states, they're coming to Florida. A lot of them are coming from a tech or finance background. And Florida recently opened what's called a fintech sandbox, which is a stripped down regulatory environment for companies to come and experiment and fast track their products to market. And a lot of them are moving to Miami, which is fantastic because the mayor of Miami, Francis Suarez, has become something of a Bitcoin cheerleader. He published the Bitcoin white paper on the Miami government website. He was, I believe, the first government to do that. He's exploring how to pay his employees in Bitcoin and allowing people to pay for taxes and fees in Bitcoin, which is really fantastic. In a time when so many politicians are very hostile to tech and hostile to innovation, it's so fantastic to see mayors around Florida, not just in Miami, really embracing this technology.
Wow, what's the benefit to them?
So Miami is the kind of the gateway to the Latin world. The Latin world has not only a big need for cryptocurrency, but a great interest, right? So people who move to the U.S., they often send money home. And so cryptocurrency is a great way to send remittances. But beyond that, a lot of people in Latin American countries, unfortunately, live in environments that have a lot of monetary instability. They have unstable governments that might be expropriating assets. So cryptocurrency is a way to protect that. So it's no coincidence that we see Miami, which is so linked to the Latin world, becoming something of a Bitcoin hotbed.
Wow. This is not financial advice, but how high do you think Bitcoin will go?
Bitcoin is going to the moon. It's such a fantastic technology. It's such a valuable asset. And what you're seeing this year is the financial institutions are getting interested, right? So you see big companies like MicroStrategy, which are, owned, by the way, by big guys like BlackRock, like no slouches. Like these are, very established financial institutions, and they're buying, hundreds of millions of dollars worth of Bitcoin. And they're doing well, right? Their stock seems to perform quite well after these announcements. Their shareholders are happy, and other executives are seeing that. Other financial analysts are coming to understand exactly the value proposition of Bitcoin, and they want to get into.
So it's just like any other scarce resource. The more people that buy it, the higher the price, right?
Exactly. And it's fundamentally valuable, right? The technology underlying it, to be able to make a direct online transaction. I mean, it is a paradigm shift, right? It is the internet of money. It's huge, and we're just at the cusp of it. We're just at the beginning.
Insert rocket emoji here. on the screen. Andrew O'Sullivan, I'm getting closer and closer to understanding it, and I'm very grateful for you. I hope we can do it again.
Yes, likewise.
Thank you, ma'am. You can go to Andrew O'Sullivan at the James Madison Institute. Okay, good stuff. True story. Mike Slater, spread the word. Hey, Slater Crusaders, welcome back to our special about cryptocurrencies. I want to put the grand finale on this and try to bring this all back around. John Carney is here. He's the Breitbart economics and finance editor. John, how are you, brother?
I'm doing great. Thanks for having me.
Man, I'm grateful you're here. So we just talked to two guests who were very pro-Bitcoin. Where are you on that spectrum?
So I'm on the spectrum of I wish I bought Bitcoin back in 2011 when I first started writing about it. I would be a super wealthy man right now. I am, however, a little skeptical about what the value of Bitcoin long-term is and whether or not there is the underlying philosophy of Bitcoin is actually correct. I'm not sure that it is.
What is that underlying philosophy?
That you want to have a decentralized store of value and unit of account. That fundamentally that there's something wrong with central banking and that you want something that's removed from that to take the government out of money. I'm not sure that that really works out, in part because one of the main functions of government throughout history has been actually the organization of money. And so we don't really know what happens if you take the government out of money.
Really good point. What would be our historical precedent? Like is there one? Is there a historical precedent of government not being involved in money?
Not very much. Governments have been involved in money. In fact, one of their main functions was the printing and making of money going back throughout history. Really, governments have actually anchored money by causing people to pay taxes in money, which requires everybody to then earn money. Bitcoin lacks that anchor. Right, so that you still need to, in order to pay your taxes, and a lot of Bitcoin investors have found this and actually been kind of upset by it, but have discovered that you owe taxes in dollars. So you still have to convert your Bitcoin to dollars in order to pay your taxes. That can be confounding, right? What do you do when you owe money in one currency, but your savings are in another? Well, you have to convert it. But that then might mean giving up some of your gains, selling at a loss if you bought at a higher point. And I don't feel like that has been very well appreciated by a lot of Bitcoin users so far.
Yeah, this is a good question. So do you think the pro-Bitcoin people, or the people all in, whatever, the advocates, are they preparing or rooting for a world where there is no dollar, where it's only cryptocurrencies?
I do think that they want, a lot of them want to see cryptocurrencies displace the dollar as sort of the world's reserve currency. They think, why would we have this thing that can be controlled by a central bank when we can have something that isn't controlled by a central bank? But so the problem is we don't actually have a record at all of whether or not you can run a modern economy without a central bank. The world economy was developed with central banking. Can you do it? Can you run the international global economy without central banking? That's not clear. What happens when you have a recession and you don't have a bank that can lower the interest rate, right? Who's in charge of the interest rate on cryptocurrency?
And this is so weird. I'm just trying to think of there's no specific historical precedence to this, but there's definitely a historical precedent to disruption of monopolistic systems. We create a different system, and then the same problems just emerge again. Does that make sense? Because I feel like conservatives, to make this political, would be against if the UN came in and said we need a world currency. right? Like I think conservatives would be like, that's a problem. But here we are kind of talking about a world currency, and it seems like conservatives are, kind of cheering it on. But I feel like if the world does take this over, there would still be some sort of Bitcoin-esque central bank controlled by someone. The government won't not be in control of it. Does that make sense?
No, absolutely. I think that's right. That eventually what we will develop is, if cryptocurrency becomes the currency, the global currency in some sense, which I do not think it will. I think that governments will fight to maintain the yen, the dollar, the pound, that the world's biggest economies aren't going to give up their control of their currency just because, the people want to trade Bitcoin, right? That I don't see why that happens. But number two, if it did happen, I think they then could take control of it.
Yes. So which leads me to my next question. How could the government screw this up?
Very easily. One of the main ways you could mess with this would be to have the government collect a lot of cryptocurrency and then inject it back into the economy so that it trades at the government's preferred level. So in other words, if cryptocurrency, shoots up to, if Bitcoin is at $100,000 a Bitcoin, and the Fed has enormous amounts of Bitcoin, it can then say, well, we're going to push the value of Bitcoin back down. People don't think this can happen, but remember, governments are fundamentally taxing authorities. So of course they will accumulate vast piles of whatever your currency is, and they will therefore then be able to control the price of Bitcoin. So we will see government control of the supposedly decentralized monetary system very quickly.
And as you're talking, I'm thinking America, but yes, but also China, India. No way are these tyrannical countries, China in particular, going to let this go under their radar, right?
Right, and not only China. So first of all, yes, a globalized currency will largely be controlled by China because they have no compunctions about that. But also the US, we will manipulate the price of whatever cryptocurrency becomes widespread. There's no way that we will, in fact, it's hard to imagine a world in which if we are paying most of our bills in a cryptocurrency, then the government will tax us in cryptocurrency. The government will have an enormous store of cryptocurrency and will be able to control the price of cryptocurrency. Think of OPEC, right? If you have all the oil, you control the price of oil. Cryptocurrency will be controlled by the people who have most of it, and the people who will be able to accumulate the most of it will be the people with the guns and the soldiers, meaning the government.
Just like gold, right?
Absolutely like gold. When gold was the basis of the international monetary system, it was completely controlled and manipulated by the government. And in fact, at one point, the US government outlawed the individual possession of gold because they wanted to be able to control its value. And that's what will happen in cryptocurrency. So people who think like, oh yes, I'm a libertarian, I'm going to fight back against the government, buy lots of cryptocurrency. Guess what happens? Then the government steps in and takes control of your cryptocurrency. It literally tells you, you have to, one, pay your taxes in it, have to reveal how much of it you have at any time, and three, maybe outlaws the individual possession of it so that you have to have it in a registered bank that reports what your holdings are to the government.
And then I'm thinking, let's say the cryptocurrency, Bitcoin owners decide or something that the government can't buy any. Well, now you have to have some entity within the Bitcoin ownership to do that. And now you've created your own new Bitcoin central bank controlled by who knows who. And now we have all the same problems all over again. Oh, John. So this being said, what do you see short term? I guess short term maybe means like 5 years for whether that be the price or what governments are going to do with it.
Right. So I think we will see increasing cryptocurrency surveillance. So I call it surveil currency, meaning that there's no way it remains crypto In fact, what cryptocurrency really is a tracing mechanism, right? You can tell the chain of ownership. And what the government will do is try to make these very public and therefore make ownership and transactions in cryptocurrency public. It'll be like Venmo, when people didn't realize that Venmo could project their payments to people. And you had like kids at Columbia University ordering like drugs from, on Venmo and like blasting that out to the world. That's what that's the future of cryptocurrency, is that the government is going to surveil it, and we will therefore be it will be the opposite of what people think. It will not be secret private transactions. It will be very public transactions. And you hear this already from Janet Yellen. This is the direction things are going. There's going to be, they will call it transparency. I will call it surveillance on cryptocurrency transactions.
This has been my big takeaway from the special, is I thought it was all anonymous stuff, and then was told it was decentralized stuff. And now, based on talking to you, it sounds like, and these other guests, that no, it's not anonymous. It's the opposite of anonymous. The point of it is that it's completely in the open and will not be decentralized. Will ultimately be centralized. So it's the opposite of all the things I initially thought. Okay.
That's right.
Well, I'm going to have to leave it there, John. To be continued. But I'm
Thanks
grateful for you, John. Thank you, brother. How should people read more of you? In Twitter, or what do you like?
Yes. First of all, go to Breitbart.com. I cover economics and finance for them, and it's an amazing website. And second, follow me on Twitter @Carney, CARNEY. All
right, we'll do it again. Thanks, John.
Thank you.
So I don't know what you want to do with this special. We've had our ups and downs, certainly to be continued. Mike Slater, true story. Spread the word.